Hello and welcome everyone to another session in the Solid Finances series. I appreciate you all took the time to join us today. A couple of housekeeping notes before we get started. First of all, just a reminder about our website. And I'm actually going to show you, we haven't done this here in a little while, but let's see. This is the website, which most of you, I think, have been logging in through. But just because I've got a couple questions, I just wanted to remind people. If we click on webinar schedule, obviously there's the join webinar, but here's also the schedule for our upcoming sessions are available there as well. And then on the left, you will see it says Joel Schumacher and email me. So if you've got questions or clarification or something like that, please feel free to click on that or send us an idea for a future session. We'd appreciate that as well. The other thing I wanted to point out was the past recordings. Obviously, Wednesday at noon doesn't necessarily work for everyone, or maybe you've even missed a session or wanted to share it with your spouse or your friend, something like that. We do record all of those here, and the resources that came with those sessions are posted here as well. And if you scroll down, you'll notice they go back quite a ways. We do take them down after they get outdated, so we usually only have about somewhere between 40 and 50 recordings up there as well. So just wanted to make sure that you were aware of that website. I know many of you have been using it, but just a reminder that that's there for you, whether you want to review something, share it with someone, or just go back and get the handouts that were related to a session. So, all right, with that taken care of, just a reminder, our sponsors, Montana State University Extension, and then North Dakota State University Extension also helps us provide this series to you. And again, I already talked about our website resources, so I won't cover that again. Couple of reminders, we have 3 sessions left in this year's Solid Finances series. Next week, I'm sorry, I've got an error on the slide there. It will be tips and tricks for saving money at the store, but I will not be your presenter. Carrie Krug with Montana State University Extension will be the presenter there as well. And then on March 2nd and March 9th, those 2 sessions are ones that I'll be teaching. The last one we added, it may not have been on your initial schedule due to we had several requests for some discussion around life insurance. So mark your calendars for March 9th if you didn't already do that. But again, 1 week from today, we will have tips and tricks for saving money at the store. Now, I also wanted to share just kind of a related item that you all might be interested. You notice we do have a week-long gap. On February 23rd, there won't be a Solid Finances session, and the reason is I will be participating in, and I'm on the planning committee for the Montana Financial Education Coalition conference that we hold every other year. We did make the decision to have a virtual conference this year, and there won't be any cost this year to participate, so might be more accessible than we have in past years, so we're going to try this out. Again, MTMFEC is the website there, and if you would like the direct invite to that, put your email address in the chat window. You can just send it to me after the session. I'd be happy to forward on the invite to that. But day-long conference, and we're going to have kind of 2 keynote speakers. The morning keynote speaker will be Paul Greenwood, and he's a retired prosecuting attorney from the San Diego area who's processed a lot of elder financial abuse. And so he's going to talk about some prevention tips. He's a well-known speaker, excellent there. Then Marcia Getting, who you've heard in this series the last few weeks, will then provide a session around avoiding probate, followed by Summer Red, who works for AFCPE, which is the organization that gives me my financial accreditation for being an accredited financial counselor. And she's going to talk about some strategies for successful online learning with financial education. We'll take a break for lunch and have our second keynote speaker, which will be Sean Spruce, and he's going to talk about his experience delivering financial education in the pandemic. If you haven't ever heard Sean speak, he's a very engaging speaker, works for the First Nations Development Institute, does a lot of education to Native American communities across the country, but really just a phenomenally engaging speaker there. And then we'll have Dax Schiffer with the Montana Council on Economic Education talking about some of the simulations and how they use those to teach financial literacy, primarily in schools. And he'll be talking about the Montana experience. And then we'll have Sean Thomas with a company called EverFi, and he'll talk about the digital resources they have for youth and learning education. So if you're interested in attending, we will have a week off from Solid Finances. Feel free to fill that time by attending some or all of this series if you'd like to, that Montana Financial Education Coalition is offering. All right, enough with the housekeeping notes. Let's talk about today's session. And again, today's session was one that came from a variety of feedback that we got from people that had participated in Solid Finances in the past. So we kind of lumped together kind of a variety of sort of requests into this session. And we'll talk about the benefits of making your finances automatic. So that's what we're going to talk about today. And there's going to be some advantages and also a few cautions as well. I don't want to overlook those as well. So please send questions in throughout the session and we'll be happy to get those answered. All right, so these were some of the comments, questions, things that we heard, feedback that kind of led us to have this session. So, you know, people were saying they've been charged late fees and that costs them a fair bit of money over time, or even things as simple as, you know, I have this bill, but I forgot to mail it because I needed to go get a stamp and I'm never at the post office when it's open. You know, also people that have long-term savings goals, maybe it's retirement planning or saving for your kids' education or buying a car, that you're going to set aside so many dollars each month, and like a good New Year's resolution, you have this idea, but some months it just doesn't happen. And then you don't end up getting to your goal when you want to. So again, another kind of challenge there. We also have heard folks that, you know, they get paid monthly, but the bills that come late in the month, sometimes they have to delay them until the next payday. So this might be a tool that maybe could help them budget a little better soon. And then this, I think, is my favorite. You know, we heard a lot that paying bills just isn't their favorite thing to do. It's just not something they look forward to going home after work to do, to take care of that. So automating is a way to maybe spend less time each month taking care of your bills. And then always this one, you know, forgetting your online password to pay your bills. Obviously, it's great that we have internet security, you know, for financial accounts, but probably if you're like me, there are times when you're doing the reset my password option just as often as you are logging into some websites. So automating might help address all of these different issues depending on your situation. All right, so some of the advantages here, just right off the bat, you know, avoiding late fees. You know, anytime you can avoid a fee you don't have to pay, that's usually a good thing. I also mentioned reducing the amount of time you spend on your finances. If you used to have to write a check and mail your, you know, payment into your phone company, and now it just comes out of your checking account, maybe that reduces the amount of time you're spending taking care of those things. Saving on stamps, although this might be less important than years past, because many of us, even if it's not automatic, may be making electronic payments. And then staying on track for those longer term savings goals. You know, this can be a really helpful tool to help you get to, you know, long-term goals. And then maybe this also helps you stick to your budget, specifically if you can help control the timing of these payments. So those are some of the possible advantages. And now let's talk a little bit about some different examples of how this might work. So I'll start with this one just because it kind of didn't fit elsewhere. But you know, the time and hassle factor, not everyone dreams of spending their time essentially being an accountant for their personal finances. So, you know, maybe it's just not something you want to do after a long day. Maybe there's particular times of year when you are very busy and it's just, you know, I do really well, but you know, during the month of July, this goes on and I tend not to be home as much, you know, and I just don't have the time to take care of it. So the other issue, and this might not come up for as many of us that are working, but maybe if you go on vacation, or maybe you're retired and you spend part of the year somewhere else, maybe, you know, taking care of bills can be a challenge if you're not home to receive that bill in the mail and get it, you know, paid then in a timely fashion. So automating things can sometimes help, you know, with that as well. You don't hear it quite as often, but you know, whether the bill gets lost in the mail to you or lost in the mail going to the company might result in a late payment. So this could be an opportunity, you know, to avoid some of that as well, just the hassling with those kind of things if we can get it taken care of automatically. All right, now I also wanted to cover a couple definitions that I'm going to talk a little bit about, just to make sure that I'm clearly communicating some of the things that we're going to talk about. First of all, I'm going to use the term ACH payment, which stands for automatic clearinghouse. And essentially, this is an online payment that's usually from a checking or savings account. Maybe it's possibly from a money market account. Um, but it's a different process than a credit card being paid. So that's going to be the distinction. So this is essentially paying a bill electronically using a bank account as opposed to a credit card payment. And then I'm going to talk a little bit about electronic statements. So this doesn't necessarily have anything to do with whether your payments are automated, but this is just when you've chosen to receive your bill each month via email, via text message, or maybe both, but not as a paper bill coming in the mail to you. And then automatic payments, the definition that I'm hoping to communicate today is payments that you're going to schedule for multiple months all at once, or multiple quarters if something's billed at once. So this isn't logging into your, utility company's website and paying this month's bill by, putting in the dollar amount, selecting it and hitting submit, and then doing the same thing next month. That's an electronic payment, but that's not an automatic payment. And then electronic payment, again, just a payment that doesn't involve you mailing a check in or dropping cash off. So this is a payment that you're gonna, initiate via your phone, via the internet. Could come from your bank account, or it could come from a credit card account as well. So those are the terms I'm going to use, just so I'm clear as I'm communicating how these different tools might help different situations. All right, so let's start with some investing examples. A lot of times with investing, we've got goals that are out there more than 3 to 6 months. A lot of these are multiple year goals, sometimes multiple decade goals that we're working towards. So, retirement is probably the longest term one that we think about, but maybe you're saving for a down payment on a home that you expect to save for, 3 to 6 years or something before you can get enough money to take care of the amount you've set for yourself. And then education, it could be you're saving for your child's college education or something. And you might have, let's say 18 years that you're trying to achieve to get towards that goal. But again, more than a 3 or 6 month goal. And even a vehicle purchase, it could be that you're saving up for a few years so that when your current vehicle is wearing out, you've got funds to at least make a sizable down payment on a newer vehicle. So most of these, again, requiring years to obtain, but missing a month or two could certainly get you off track. And that month or two, right, could be Christmas season. Maybe you went on vacation that month. Maybe you just had a month where you spent a little more than you thought you would, and the end of the month came, or you just forgot to go in and make that payment towards your investing goal or make that contribution, can get you off track in terms of achieving your long-term goals. So a couple quick examples here. Let's assume you're going to save $250 each month for 10 years. We'll just say you're going to earn 5%, and it's for your child's college education. So if you had done that, you'd have just about $39,000 available at the end of that 10 years that you can use to help pay for your child's college education. But let's say that, over the course of that 10 years, every year you missed 2 payments, either because you forgot to do it, or you ran out of money that month, or for whatever reason you didn't get around to doing it. Just missing 2 payments each year towards your investing goal means that you're going to have about $6,500 less that's available to help pay for your child's education. So might not seem like a lot, just 1 or 2 things a year, but it can really put you behind in terms of longer term goals. Let's change the story and say that it's retirement. And let's say we're, 45, and at 65 you want to retire. So you start saving. Again, we'll do the same $250 each month for 20 years, same 5% rate. If you're to do that for 20 years, you're going to have about $111,000 available to spend on your retirement. Again, if you miss 2 monthly payments per year, you're only going to have 86,000. So you're going to have about $25,000 less available to you in retirement because you missed making those contributions just twice a year over the course of saving for that investment. So pause here. We've had a question come in about IRAs, and somebody, I guess, just reinforcing that they had the same experience, that they used to manually go in and make IRA contributions when they had extra funds. Now they set a monthly amount that comes out of their bank account each month, and they've been more successful at contributing regularly to their IRA. So yeah, that's exactly the kind of situation that this is highlighting. It's just getting it automated can help you meet your goals. So. All right. So how would we automate our investments? So most likely you're going to contact your IRA provider, your investment firm, wherever you're saving your money. And maybe that's your bank if it's going into a savings account. And then wherever that account is held, you're going to provide them the information that says, I want to take, $100 a month or 200 or whatever the number might be, and take it from this account. You'll provide that bank account information to them. And then they'll withdraw that amount and initiate it from there. And so most of the time, this is going to start wherever your current investments are related. And obviously, if you're dealing with a company, a mutual fund company, they are well aware and regular users of this system. So they're going to have forms that should be relatively straightforward for you to fill out. So that's how you would automate your investments. Another question or comment came in here too, that their employer allows you to split your automatic paycheck and send some directly to a savings account. Yeah, so if you're getting paid electronically, some employers do allow you to say put 80% of it into your checking account and 20% into a different account that you provide, which could be your investment account or your IRA or something like that. So you may have an option through your payroll department to also do that as well. All right, so a couple facts about late fees. I mean, anytime you can avoid a fee, I generally think it's a good thing. So the average late fee is currently $31 for credit card accounts. I got that from the Consumer Financial Protection Bureau. So $31 each time a bill is late. And just collectively, to give you an idea, in 2019, credit card companies charged charged $14 billion in late fees. So this is a really large amount of fees that consumers are paying. So anything we can do to reduce that, I think, is generally a good thing. Utility bills varies depending on where you are, but $20 and $25 each time a bill is late is a common charge. And then late fees also hurt your credit score. So most of the utility providers or lenders report late payments on your credit report, and having late payments on there is going to lower your credit score. So the next time you go to get a loan, it might be harder for you to get as good of an interest rate, which could cost you additional money. So in addition to the late fee itself, it might catch you if you go to apply for a loan later on. So again, avoiding late fees, definitely a good thing. And there's a whole bunch of different types of bills that could have a late fee on them. And this is just sort of a small sampling, but utility bills, your phone bill, your cable bill, your internet bill, water, sewer providers, all of those things, easily could have late fees. And if you think about maybe paying one or two of these late a month, you could easily have $50 a month every month in late fees. So again, trying to avoid that, definitely good for most people's finances. How to automate these, it can vary a little bit just because there are quite a different number of providers of these utility bills. With most, I would say, or at least utility bills that I have, many of them have an option to go to their website. So this is certainly true for the internet provider that I deal with and also my gas and electric provider. I can log on there. I can actually set it up so that each month they draw it directly out of an account. whether it be my checking account, or also they allow me to put a credit card on there as a payment option as well. Now, I also have the option of being able to go directly to my bank's website, entering in account information for my utility company, and then initiate the payment essentially from my bank as opposed to from the utility company. So could be a couple different ways that you can do this. I'll also mention not every one of these bills has an online payment option. I currently have one bill that I receive that there is not an electronic payment availability. So that one I've got to either write a check or, I guess stop by the office and I could pay cash as well would be another option. But the rest of my bills, one of these two options is available on each of them. So, all right, and I got a comment here that they are part of a homeowners association that does not have an online payment option, but all the rest of their bills they do pay electronically. So yeah, that would not surprise me, especially if you're working with a smaller company as well. So there are two questions that have come in so far, and I appreciate that both come in. I'm going to come back to both of them because they're going to be tied into a slide that I've got a little further in the presentation. So, all right. Another thing that's common with specifically utility bills in the sense of gas and electric bills, at least here in Montana, but it may also be true in other parts of the nation. Your electric bill may not be the same each month. In Montana, we tend to have higher utility bills in the winter when we are heating our homes. I know in southern parts of the country, it might be the reverse, where when air conditioning season is going, your utility bills are higher. So this is just an example I put on the right side here of, essentially seeing the months from sort of November through April as being more expensive than the summer months. And that's probably typical of a lot of Montana bills. One thing that a lot of utility companies do is something called average billing or balance billing or estimated billing. And essentially what they'll let you do is they'll look at your last year of history. They add all these up, but essentially divide them by 12. And then they say, we're just going to bill you that average amount for the next year. And then if we get to the end of the year and we need to make adjustments, they'll send you an extra bill or a refund, depending on how that worked out. But what that sometimes lets it do is make it a little bit easier for you to automate. So you know that how much is coming out and you can budget for it every month. So you might feel a little more comfortable automatically agreeing to have $120 come out of your checking account to pay that bill, as opposed to not knowing if the amount that would come out is going to be $45 or $170 based on what happened. So this isn't necessarily directly related to automating your bill, but this feature might make you feel a little more comfortable in terms of budgeting and having an automatic amount come out. All right, loans. Most loans that are taken out today are going to be paid through the automatic clearinghouse program. It might be an absolute requirement. Maybe not. Maybe they'll still allow you to make payments. If anybody remembers getting a coupon book where you would tear out the payment stub that went with this month's, say, mortgage payment and mail it in with a check, or drop by the bank and do that. I think those are pretty rare these days. It's possible they still exist. Most of them are going to be set up as an automatic payment right off the starting. But if not, it's usually something you can ask for and get set up. I know at one point when I got an auto loan years back, I actually received a 0.1% interest rate discount for doing automatic payments instead of writing checks each month. I don't think that's necessarily true anymore. I think the standard is now automatic. But if your loans are not automated, probably something that you could get set up if you'd like to get it taken care of. One challenge I would say with that, especially with a loan you might pay off early. So let's say your mortgage loan, if you have extra money this month, instead of making the normal payment, you might add $50 to it or $100. If you don't know how much that extra amount is going to be, automating it with the base amount and then finding out if there's a way you can go in and add an additional payment, could be handy, as opposed to the system where you go in each month, and say my normal payment is $1,200, but I'm going to pay $1,350 this month. And you enter it, make it all at one time. So it can kind of disconnect the two and make it a little bit logistically harder to make extra payments, but usually there's still a way you can do that. All right, now this I think is going to tie back to a question we come in about, and I'll start with that question is, how does the ACH make money? How do they get paid? Well, this is going to be an example of that. So you might see, this is certainly true for my situation. If on my internet bill, if I pay by credit card electronically, they charge a fee on top of the base bill. So instead of my $112, they're going to charge me like $114.50 or something. But if I pay with my bank account, they don't add an extra fee. So if I use the automatic clearinghouse system, they're willing to not charge me an additional fee. And the reason why is this: whenever you make a payment, you're using a payment network. And there's different kind of networks that are out there. I mean, you've probably seen things like MasterCard and Visa and American Express. And there's other providers that just have a blanket system and their name isn't necessarily kind of out there. But if I make $100 payment, and this is an actual example from a business that I've worked with, the company actually only gets to collect $97.20 of that. So I pay my bill for $100, they only get $97.20. And the credit card company essentially charges a fee for that transaction to the person receiving it, so like the business in this case, and then the business only gets $97.20. Now, if I did that same payment via the automatic clearinghouse, so paying it with my checking account, the fees are only $1.30. Okay, and so the company's actually going to get $98.70. So the companies are really going to encourage you to use your checking account or your savings account to make that payment, because they're going to pay less fees. Some companies, they said, we provided $100 of service. If you want to pay us with some method that costs us money, you've got to pay the extra amount. And that's what my internet company is doing with this policy, to say, if you're going to pay by credit card, we're going to charge you a little bit extra to cover those additional fees that we have to pay. So again, if you get those choices, you may see businesses encouraging you to do that. This is also the same reason if you've ever been to maybe like a coffee shop and it said like no credit card purchases under $5. It's because the fees are so high that they would actually kind of lose money by running a $3 transaction. The way these fees are calculated is usually a combination of, say, 50 cents every time a transaction happens plus a percentage of the transaction. So for those really low dollar amount purchases, the fees can really be quite high compared to how much money the business is receiving. So if you want to help your local business avoid some fees, usually paying via your debit card will have less fees to them than paying via credit card. So, and this credit card fee too, I put in one example of $280. Someone that walks in with an American Express card versus a Visa card versus a MasterCard could all have different fees for the same $100 transaction with the same business. So it varies not just from business to business on what their arrangement with the companies are, but also what type of card payment you bring in to make that payment there as well. So if you ever wonder why the credit card companies can give you like points back, it comes out of this amount of money that they're earning every time you use that card. And again, the business kind of pays the fee to the credit card company. Credit card company uses at least some of those funds to provide, bonus programs and incentive programs to you. Some of the rest of it goes to their costs and, profitability of their company. So any questions on that piece of it? All right. Just a couple examples from some situations that I've heard recently here. We had somebody bring this up earlier, a homeowners association, that they cash or check payments had no fees. Electronic payments, whether it be credit card or ACH, they just charge 2% on top of whatever your bill was. So not uncommon to see that kind of arrangement where the businesses are trying to cover those costs. And then again, with an internet provider, they have the fee for credit cards, but not for if you're paying via a bank account. So if you see those policies, this is kind of the underlying reason why those businesses are doing that. So couple reasons you might not want to automate everything you're doing. So I don't want to present this topic to say that everything should be automated all the time. So let me start actually with one of the questions that came in that says, I live on a fixed income. I worry about automating my bills if there's a month when I don't have enough money. So excellent point. Let's talk about that and a couple other issues here as well. So one thing that I don't like to automate, and I've not automated, I do use a credit card and then make a payment at the end of each month. But I like to review that bill before I pay it. So I look at the charges that show up on my statement and I go over them and make sure that, yeah, I did get gas here and I did buy groceries at this store. And yes, I did make this online purchase or whatever it is. But before I make a payment on it, I like to see that statement and go over it. So for me, I don't want to automate it because then I think I wouldn't go over that statement and review it and make sure it's accurate before I did that. So that might be one reason that you might not want to automate it. Another reason you might not want to automate it, I think, is directly related to that comment that we just heard a minute ago, that at least in my case, my credit card bill is not the same amount each month. There's months when it's quite low. There's months when I've spent a lot more. If I was worried about how much money I had in my checking account, I might want to review it, make sure my checking account has enough funds before I make that payment. So just another opportunity sort of for you to review it, double check you're not going to overdraw your checking account. If you had spent a large amount on your account, maybe you bought a washer and dryer or something, maybe you needed to move some money from savings into your checking account before that bill came due. So that would give you an opportunity, if you were reviewing it, to handle that variability in the bill and make sure it's not going to cause other problems down the road. So that's certainly going to be true of credit cards where the bill may vary month to month. The other thing too with credit cards, you might automatically have it set up to be paid balance in full, which is kind of what I was describing. You might also automate it and it would just pay the minimum amount due, which might help with making sure you have enough money. But as most of us know, if you pay only the minimum amounts, you end up paying an awful lot of interest charges over the course of your credit card balance, I guess. So another reason you might want to look at it and say, I really don't want to just make the minimum this month. Maybe I can't pay it off in full, but I want to pay most of it. Just an opportunity for you to review it. And automating a credit card, might have some drawbacks compared to some other bills. All right. Some other reasons not to automate. So one of the things, if anybody remembers a while back, there was an infomercial guy that I think he had some kind of machine that cooked a turkey and you just set it and you forget it, right? So you do a little bit, you walk away, it takes care of everything else. And in some ways, that's kind of what I feel like for automating your bills. So you just set it up to pay your, phone bill, and then every month your phone bill gets paid. Well, you probably don't review your bill very often in that case. You probably don't really look to see if there's a better plan. And you're likely to just not call in and do anything. So the bill will just keep getting paid month after month, which is you don't get any late fees. Those kind of things you're taking care of. But what if you stop using that service? So things like a gym membership, maybe some kind of streaming internet content, internet radio, magazines. Rather than write a check to them, they always want you to sign up for monthly payments, right? And they'll get your bank account information or credit card, and they'll charge every month, and then your gym bill's just taken care of, right? But you may have quit going to the gym, but that money keeps coming out each month because you signed an agreement that said, I'll keep paying this and you can take it out of my checking account every month until you call to stop it, right? Or do something to stop it. And businesses know that you're not always that likely to call and stop it. And gyms love it when you are a member, but then you don't actually even come in and take a shower there and use their equipment and cause wear and tear on their, their facility. Um, Certainly true for magazines you may have quit reading that are just piling up in the corner. You have to physically do something to stop those things. So if it's a service you're not sure if you're going to like, if it's a service that maybe like a gym that you dream of going every day, for the rest of the year, maybe you should see if you can pay 3 months in advance with a check. And then if you're still using the service, then go in and pay another 3 months. But then if you quit using the service, um, you're not automatically paying for it. So the burden is kind of on you to stop the payments if you automate it. If you write a check or pay cash up front and don't sign a deal to keep paying automatically, you're much less likely to end up paying for months or paying for a service that you're not using. So be a little cautious with those. Many of the companies, they're well aware of the same setup you are, that it's easy to keep making payments if you don't have to do anything. So these folks would love to just, have your business in that way. So something you may or may not want to do for some of those services. So this came up a little bit earlier about running out of money and things like that. Each of you has a different budget situation for how close your checking account runs to zero each month. Some people may keep a comfortable buffer. Others maybe, there's months when they run out of money sort of before the end of the month. So if you get paid on a regular schedule, specifically one that's either bi-monthly or monthly, and your payday is always the 1st and the 15th, or it's the 3rd of the month, or whatever it might be, maybe you want to go ahead and set up like your mortgage payment to come out 2 days after you get paid, and your utility bill, same thing, to get them set up so that the money goes into your account and then you're ready to make those payments right away. But if you do get paid on, let's say, the 1st of the month, and you've got a bill that's due every month on the 29th, and there's months when you might run short of money, that can be a concern that it's automatically going to come out, and maybe you'll have an insufficient funds. So if you're in a situation where you regularly draw your checking account very close to zero, maybe there's actually times when having a late fee is better than overdrawing your account. So you may not want to schedule those automated payments late in the month or right before payday if you're on that kind of schedule. So something to consider, and you'll know more about your own situation if you do that. Now, on the other side of this is maybe the automating all your payments and moving those payments to shortly after payday. And then kind of the money that's left is your, let's say, fund money or money that you're going to use to live on. Maybe that's actually a budgeting tool you can use to help improve your budgeting, that you pay all the bills you have to pay the first 2 weeks of the month. And then the rest of the month, you kind of look and you're like, well, I want to go to the movies, but there's not enough money to withdraw to pay for the tickets, so I'll just have to skip that thing. So maybe that's like a budgeting tool you can use as well. But cash flow is certainly something to consider. So now in the resources section for today, I just put in one chart, and this is kind of a snapshot of it. But what it gives you is an opportunity to write down your different bills, and then kind of go through a checklist about what's available, whether it's a good idea, and maybe you can make some notes. So what I did, I'll just kind of walk through here. The first line, internet bill is the bill we're talking about. When is it due? 15th of every month. Is an electronic payment available? It is. Does the amount vary each month? It's not, it's fixed. And then are there fees for online payment? In this case, only if you're using a credit card, but no fees for ACH payment. Does the bill need to be reviewed each month? My judgment on this one was no, because it's the same every month. And then is the bill currently automated? And in this case, I put no. And then you can put a note like, okay, this is something I would like to go in and automate. Now I did the same thing for a credit card, due on the 20th of the month. Electronic payment is available. Does the amount vary each month? Yes, right? So we talked about that earlier. That might be a reason maybe not to automate. Are there fees for online payment? There are not. Does the bill need to be reviewed each month? I think yes. And then is the bill currently automated? No, it's not. And then my note on this would be, this is not a bill I want to automate. So you could also put that in there for an IRA contribution. no particular due date on something like that. I guess unless you're talking about a tax deadline, but if you want to set up $100 a month, it doesn't matter whether you do it on the 5th of the month or the 26th of the month. So you could go through line by line and look at your bills, and kind of go down there and say, yes, these two I need to go ahead and get online and get automated. But maybe these other three are not automated, and maybe there's a good reason why not. So, and one other thing I think I didn't mention too is sometimes the due dates on these doesn't always have to be set in stone. So, if your internet bill's the 15th of the month, but you get paid on the 16th every month, you could probably work with your internet company and say, can we change the billing date to the 5th of the month? And they can probably do that if that would help you in terms of budgeting. So just a tool I would kind of encourage you to look at with your different bills and see if there's anything you could be automated. You could also add another column or in the notes, put in, like the late fee on this particular bill is $20. Maybe on a different one, the late fee is $30. And if you are in a situation where you can't make all your bill payments each month, maybe that would help you say, okay, I'm going to save the $20 one till next month and go ahead and pay the one that has the higher late fee as well. So go ahead and put whatever notes, kind of customize it there. But I think it's a process you can use to review your bills and decide which ones automating might help you achieve your financial goals a little more. So with that, let me pause here and see if we've got any questions. All right. One that came in a little bit earlier, and I think we only touched on partly, is automating a good idea when your income is low, but predictable based on Social Security? It makes me feel less in control to hand over control of your bills. Yeah, so there's a couple good points. One thing this person mentioned is low income, right? So maybe there is a possibility that they're worried about not having enough funds in their checking account. So maybe specifically a bill like a utility bill that might go up or down, or a credit card bill. Maybe those are ones you don't want to automate, so you can make sure that you've got cash in your account at the right time to make that payment. The other part of that, I would say, one good thing about Social Security or something, it's the same amount probably every month, and it probably only adjusts once a year for the inflation. So that does make it very predictable. So your other predictable bills, maybe like your TV bill and your phone bill and whatever other ones, you could set those up to come out shortly after the Social Security payment is received. There's money there, what the bills going out are, and then you don't have to worry about taking the time or accidentally forgetting or something along those lines as well. One other question was that this was, I guess it's a bit of a comment, but as my mother aged, she tended to get more forgetful with bills. Automating her bills helped us help her manage her payments as she got older. So yeah, certainly that might be true as someone ages and maybe gets a little bit forgetful in terms of their bills. And if you're trying to help out mom or dad or grandma or grandpa, maybe automating your bills is a way to simplify their sort of financial life. And then you don't necessarily maybe have to worry about them forgetting a bill, or if you're going over to help them with their bills, that they misplaced one or something like that. So yeah, excellent tool that certainly could be used to help older people manage their finances a little bit easier. All right, well, maybe people are thinking of more questions. 1 week from today, just to mention that Carrie Krug will be back with tips and tricks for saving money at the store. And so she's specifically going to talk some about grocery expenses and those kind of things. And then 3 weeks from today, March 2nd, we'll talk about creating your own stimulus package. So again, this was kind of a compilation of some requests we had. March 9th, we'll wrap up the year with life insurance. How much do I really need? And I'll be the presenter for those final two. And again, on February 25th, if you're looking for more financial information, the Montana Financial Education Coalition will be hosting a free day-long workshop. So with that, I don't see that we've got any additional questions. So thank you all for joining us today, and I hope to see you 1 week from today.